Ladies and gentlemen, good day and welcome to the Q4 FY23 and FY22-23 earnings conference call of Sandhar Technologies Limited, hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain from Dolat Capital. Thank you, and over to you, Mr. Jain.
Thank you, Michelle. Good morning, everyone. On behalf of Dolat Capital, we welcome you all in the fourth quarter FY23 conference call of Sandhar Technologies. From the management side, we have with us Mr. Jayant Davar, Co-Chairman and Managing Director, and Mr. Yashpal Jain, CFO of the company. We thank the management for providing us the opportunity to host the call. Now I hand over the call to management for the opening remarks, followed by the question and answer session. Over to you, Jain, sir.
Okay, good morning, everyone. Thank you all for being here. Let me begin by, first of all, giving you a good side of whatever's been happening. As promised and as we had anticipated, we achieved a revenue growth of 25% in the financial year 22-23 at a consolidated level, and we expect to register about the same level of growth in the next year as well. Of course, keeping in mind that everything in the market and the geopolitical situation stays stable. Our consolidated EBITDA is about 9%, but with production being ramped up and various cost control measures, we lost almost 37 crores at the bottom line basis last year on account of these losses. But the good news is that all of those loss-making units have now turned around. So this will not be something that we will have to carry forward in the future. So we expect a healthy improvement in our consolidated EBITDA margins for this financial year. In terms of the auto industry, while you've seen that all these sectors of the industry, barring two-wheelers, are in a very aggressive mode, we do expect that with the news that we have from two-wheelers, with new launches being done, there is action that has started to happen. So the auto industry, especially in the two-wheeler segment, is looking at some positive cheer in this particular year. I'm going to leave it there and then answer as your questions come along, which are directed specifically to different parts of the business. I also have with me here today Mr. Yashpal Jain, the CFO of the company, who would be happy to clarify any questions you might have in terms of financials or numbers or so on and so forth. With that, thank you all once again for being here this Monday morning. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask a question at this time. We have the first question from the line of Saurabh Jain from Sunidhi Securities. Please go ahead.
Yeah. Good morning, all. Very healthy set of numbers. Congratulations for that. I have few questions. You have given a very nice product roadmap for battery chargers, motor controllers, and DC converters. So would it be possible to quantify in terms of revenue what kind of opportunity could these three products bring to us in coming years? And when can we start seeing this flowing to our revenue?
Okay, let me answer this question. Obviously, I will not be able to give you a number projection which would be against the stipulated laws. But what I can tell you is that we have, at this point of time, 4 products which are ready. One is the DC controller, which is isolated and non-isolated. This is developed. The ICAT approval of this has also been done. There is the EV charger, where this has been done with a technical collaboration with a partner. The proto readiness is done. The performance validation is done. At this point of time, we expect that in these months as they go on, the ICAT approval is under process. Then we have the motor controller in 1 kilowatt, 2 kilowatt, and 4 kilowatt. Again, the proto readiness is there. The performance validation is done. The product validation is being done, which is also expected to go in for ICAT approval between August and October. We have the hub motor, which is already ready, but the cost of that is higher as we see at this point of time. So we are exploring different variations to the technology. For our EV business, a new company has been incorporated. This is called Sandhar Auto Electric Solutions Private Limited. The premises have been identified, infrastructure development in its progress, and the company expects to go for trial runs in the last quarter of this year. We've executed technical collaboration agreements with 2 providers, and we are working very closely with them for the development of products as per the customer's requirements. So that's the kind of input that I can give you as we sit today. Obviously, this financial year, because production will begin only in the last quarter, the numbers will be very small or insignificant, but we expect to ramp up numbers from next year onwards. I hope that answers your question.
Yeah, and that was helpful. But if you could share what was our revenue share from EVs during FY23? And of course, you won't be able to quantify the contribution from or the opportunity from these new products. But if you could give a rough idea that in next 2 to 3 years, what percentage of our turnover would be, consisted from these products? Rough idea.
Okay. Yes. So the way we are looking at it is, at this point of time, we already supply to the EVs. In fact, we supply to almost all the EV manufacturers that there are in the country. But the items that we supply or the products that we supply currently are our regular range of products, which could be locks, which could be mirrors, which could be sheet metal items, which could be plastic items, some castings, and so on and so forth. The products that I spoke about earlier are the products which are specifically for electric vehicles, for their powertrain. At this point of time, Yashpalji is here. He might be able to tell you what is the current revenue that we get from the EVs in terms of numbers. But going forward, from the EV-only products, the powertrain products that we've developed now, we expect the revenue. Very difficult for me to give you a range, but if you were to ask me in percentages, we would expect that in the next couple of years, the revenue of this could be between 5 to 10%.
Great. That was helpful, sir. And sir, in one of the...
Yashpalji could give you the number right now if you want. Yashpalji, would you have the number of...
So for agnostic products which has been supplied to the EV company, the figure is around 25 crores of the items we have supplied to the EV companies. Our existing products.
In the last financial year. Yeah, in the last financial year.
Last financial year.
Oh, thank you. Thank you, Yashpalji. Any more questions?
Yeah. And sir, in one of the past Concalls, you had talked about shift to smart locks, and that is a very big opportunity for us as realizations will go up from 300 to 400 to 1600 to 2000 rupees. So when can we see, if you could give us some roadmap with respect to smart locks?
Yes. Okay, let me put it like this. I did say 1600 and I did say 2000. But effectively, the first orders that we have in hand now range from 3,600 to 4,400. That we've already received. You'll be happy to know that one of the product lines, especially in the EV sector, has already launched our product with the smart locks. I'm also happy to tell you that we have an order from a Japanese manufacturer. I can even name is Suzuki, where the price line is about 3,700, but the product will go online in I think if I'm not mistaken, it's May or June of next year. That's when they go into mass production of this particular capability. I'm also happy to tell you, while I cannot name the customers because we are not in a public domain yet, we have two other customers where we are likely to be able to announce soon the introduction of the smart locks. I do believe that in the next 5 to 6 years, a large portion of the industry, both IC engines and EVs or any other powertrain mechanisms, will all be on smart locks. Does that answer your question, sir?
Yeah, but I have a follow-up one. So, sir, roughly 19% of our turnover comes from locks. And what percentage of that would be smart locks? And do you see that this 19% share going up substantially in next 2 to 3 years because of these high-range locking systems coming in?
Well, to answer that question, I will not be able to give you a percentage because you would obviously understand that 300 or 400 rupees to 3,700 is a big price jump. So the volumes that we have going forward are 50,000 sets, 100,000 sets, and so on, which are still small comparatively in the next financial year. However, as we go forward, this percentage is likely to go up. But let us not take away from the fact that all the other, you did say locks are 19%, the other 81% is also growing very, very aggressively. Maybe not as aggressively as this price change would happen, but I would imagine the other proportions of the business are also growing dramatically. If you look at sheet metal, where we put up 4 new plants, obviously this is all new, so that you will see a big jump in that percentage in this financial year. Castings are growing very, very rapidly. We have gone in for electrochromic mirrors, which again, there is a dramatic change in the price points. So the idea is that not just the wallet share, but the value addition in each one of these product lines is rated to go up dramatically.
That's wonderful, sir. Sir, what was the contribution from new projects?
Mr. Saurabh, I'm sorry to interrupt, sir. I would request you to kindly rejoin the queue.
Okay. Yeah, sure.
Thank
sure.
you, sir. Thank you.
Thank you, Saurabh.
A reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. We have the next question from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Hello, good morning, sir, and congrats for a strong set of numbers.
Good morning, Abhishek.
Good morning. Sir, congrats for a strong set of numbers despite a tough time, a slowdown in the two-wheeler space. Sir, as you mentioned that there is a 25% growth you are targeting in FY24. So what would be the key triggers, if you can explain in segment-wise growth in the each segments?
Yashpalji, you will have the numbers of different businesses. Would you like to answer, Abhishek?
Yes.
Thank you.
Yes, sir, I'll answer. So, Abhishek, like as you see, our MD has said that we will be witnessing a growth of near to 23-25% in the coming year. And the large part of the growth will be coming from our new projects, which were likely the 4 projects in sheet metal space. That will see a major growth in revenue terms. It will be around 70% of their existing revenues in the coming financial year. And other segments will be contributing around 21-22%. That's all, including Barcelona.
So how much incremental revenue will come from the sheet metal business in FY24, sir?
We expect that the revenues incremental will be around 300 crores, sir.
300 crores. And is it from the HMSI and TVS or other?
Yeah, there are multiple customers, sir.
And we have seen a sharp jump in revenue and margin from overseas business. So, and there was a 40% quarter-on-quarter growth in the revenue. So what is the reason of sharp growth in revenue and margin in overseas?
Yeah. So thing is that the Romania plant is was operation in the last week of the third quarter. So third quarter witnessed a higher cost of, I would say, commissioning for the Romania plant. So that was the reason the margins were down. But fourth quarter onward, they started the business, and the demand is also good in Europe. So in the coming year also, we'll see all the 4 plants in action in overseas, and that will get a good jump in terms of growth in revenues and margins also.
So what would be the contribution of the Romania plant in from the first quarter onwards in the revenue terms?
It will be around 150 crores in the first quarter onwards.
On quarterly basis or annual basis?
Quarterly basis.
So Romania plant will.
Sorry, I'm telling you consolidated Barcelona operation, overseas consolidated.
Overseas consolidated. And what would be the margins, sir?
Margins, like we are having a bit of 13% in the overseas business. That will continue.
And in the cabin and fabrication business, we have seen a very strong traction, but there was a margin concern earlier. How is the current progress on the margin and the top line growth?
Yeah, so like the commodity prices are stabilizing. You know, the cabins and fabrication is largely dominated by the commodity prices. That was one of the reasons for the drawing down the margins, but now it's improving. We expect that it will continue with a 8% annual margin, EBITDA margin in the coming year.
And my last question on this ADC segment, we have seen a very strong traction in overseas as well as domestic business. So how is the current, what is your revenue growth target in ADC? Plus, are you looking for any capex in ADC?
As of now, what are the capex earlier planned for new projects? That would be funding, because we have done the capitalization in the last financial year. The outflow will be taking place in the current financial year. So as of now, if you ask me, no new projects are under ADC. And the growth, if you ask me, in the die casting business, will be expecting around 23 to 24% of the growth in the coming year.
And margin?
Margins will be about 9%, approximately, depending on the customer demands and all other factors.
Thank you, sir. That's all from my side.
Yeah.
Thank you. We have the next question from the line of Radha from BNK Securities. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on good performance. Sir, so given that we are expecting 25% revenue growth, so if we take on a cash pack basis, we are expected to generate around 250 crores of profitability next year. And with limited working capital requirements, which has reduced significantly in this year, and limited capex. What is your debt repayment schedule next year and capital allocation policy for the next few years?
Yeah. So, like we have taken up 7 new projects in last 1.5 years. Largely capitalization is complete except the Mysore project, which will be commissioned in the current quarter, that is June 23. As of now, we have around 100 crores of capex payments to be done to various vendors to complete this Mysore and other projects that we have done. So as far as the debt level is concerned, presently we close at 547 crores of consolidated debt. We don't expect any increase in the debt. In fact, we have planned a repayment schedule in terms of the repayment of term loan installments also. So this will be coming down in the current financial year. And the capex wise also, we'll be doing the routine capex that is required to upkeep the plant and run the operations. If you see, last year we have generated a cash inflow after payment of taxes of 308 crores at console level. And with our cost saving measures and other control measures that we have taken, we expect to continue to generate healthy cash flows to take care of our needs in terms of capex and opex both.
Okay, sir. So secondly, on the EV side, could you give us an understanding that how much we have deployed just on the development of new products on the EV, and how much are we expected to deploy for the next 2 years?
Yeah. So as of now, we have started the development of EVs. As Mr. Davar told, that the site has been identified. We are in the process of expanding. So currently, roughly, we'll be spending around 9 to 10 crores in setting up the facilities. And as the business grows, we'll see how much is required to further expand it on the EV side.
Radha, let me just expound a little bit on this. That might be a question for several others. We are keeping the manufacturing infrastructure and development costs very lean. You asked what we've spent so far. A lot of this has been developed in-house over the last few years, and therefore this has been consummated in the R&D expenses that we've been doing. So we hadn't specified that this was for EVs per se. That's already been done. What Mr. Jain is referring to now is the lines that are being set up for the effective production, where development, where payment to TCs and so on and so forth is largely being accounted for.
Thank you, sir. Sir, lastly, wanted to understand, as of now, what is our market share in the locks business? And given that we are expected to supply to Suzuki, and also could you confirm if we are expected to supply to Honda Activa H and DOH, which are the two models in the smart locks? So if we are expected to supply to that and other smart technologies for the next few years, what would be our market share in locks in the next 2 to 3 years, vis-a-vis now?
So as Radha, you must be aware that we are the largest producer of lock sets, especially in the two-wheeler segment in terms of volumes, where mechanical locks are concerned. Smart locks is new. I've already announced the Suzuki business that has already been awarded to us. I am not at liberty to announce the other customers, but I would want to leave that message that development of that is on. As and when we get clearance from the OEs to announce their names, we will do that. But I see no reason why the leadership position that we have in locks will not continue going forward, even in the smart lock section.
Okay, so sir, just on the Suzuki, you mentioned that you will be supplying from next year. So just wanted to understand what are the models that we are targeting?
Well, there are two models. One is mechanical locks as well. So all mechanical locks will be supplied by us, and all smart locks will be supplied. This is a 100% changeover business. I do not have the exact model numbers, but from what I understand is that the volumes of two-wheelers for mechanical locks is about 700,000 odd. And for the smart locks, whatever smart locks they use in whatever vehicles, it could begin with something like 50,000 vehicles perhaps, which will move on to smart locks on an immediate platform.
So 7 lakhs over a period of how many years?
No, that's annual numbers.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Nitin Agrawala from UTI Mutual Fund. Please go ahead.
Yes, sir. Thank you for taking my question. Sir, firstly, when you say that, in Europe we are expecting a 13% margin, so currently we are just about 10%. So what are the margin drivers that we are building in for this margin expansion?
So, Nitin, I'll answer this question. Like, we are maintaining a margin of around 13% up in our overseas operations. As I mentioned, we commissioned the Romania plant in last financial year, right, in the third quarter. So there was an initial startup and a development cost that we have charged to a P&L account. Because of that, you are seeing a margin of around 10%, which won't occur in the current financial year. And we'll be maintaining our momentum of 13% and nearby EBITDA margins in the overseas operations.
But like in the overseas business, the margin has remained impacted from 3Q of FY22. So this was that because of the energy and raw material prices, which has completely normalized right now, and this 10% margin is building in only the startup cost? Is that understanding correct?
Yeah, largely the startup cost is in building, which has reduced our margins. Otherwise, all the raw materials and the input costs have been normalized over there.
Okay, and this startup cost is expected to stabilize from 1Q itself, next quarter.
Exactly, because the plant is being commissioned initially, as you know. We need to get a validation from customer. A lot of expenditure has to be done in development, testing, etc. That phase. So while the fixed cost continues, the development cost also continues, but this will be over from the current quarter.
And on a standalone business, would you want to give a similar guidance of where can our margins go from here?
Well, as you see in standalone also, we have shown a good improvement in our margins. For fourth quarter, like the current financial year, we have closed at a 9.6% of the margin. And as Mr. Davar has explained that in the locks also, we are expecting new businesses with good margins. So I think we will be improving these margins in this current financial year.
Okay. And sir, we see that losses from JV has turned profitable this quarter. So are there still any JVs where we are still making losses, or where we can see more turnaround opportunities are still pending, or more or less most of the JVs have turned profitable?
Yeah, let me answer that question. This question may be asked by several others as well. We have in a lot 7 JVs that were commissioned in recent times, in the last few years. There was the helmet JV, which was Sandhar, which you saw has suffered losses. I'm happy to announce that in the last year, we did a revenue of over 50 crores. And we are now not just positive on EBITDA, but we also have a PAT positive of almost 2 crores. There are others which are Winnercom Sandhar and Sandhar Hanshin Auto Technologies. There again, between the two of them, they had a revenue of 74 crores. Again, PAT positive. Sandhar Hanshin Technologies registered a sale of about 54 odd crores. Again, PAT positive about 2 crores. Jinyung Sandhar registered a sale of 47 crores. On an operational side, it is profitable, but there was some setback on account of forex fluctuations. And then we changed over from a dollar mechanism to a KRW mechanism. So in the future, we expect this to be taken off. Kwangsung Sandhar again started commercial production, registered a sale of 35 crores. Again, operationally profitable, but there was a forex liability that has been restated, and therefore it is showing a loss. Sandhar Vetron is EBITDA positive already, and we expect the business to grow in 23-24. So that is the list of the 7 JVs that we have. In the current year, as we sit, we expect no losses from any of these. I had said that, but a substantial profit coming to the bottom line of the standalone unit on account of what we've been suffering as being taken away from our main profit and loss account in the previous years.
Okay. Thank you.
Do you want to add something, Yashpalji?
No, that's fine, sir.
Yeah, thank you. So that was very elaborate and helpful. If I may just squeeze 2 more questions. One is, if you can give us some sense on, what are the new order wins in the 4-wheelers, and how are we seeing that that segment to pan out for us?
Well, what I can do is I can give you a percentage analysis of the overall thing. Yashpalji will have it as to where our volume comes from and what percentage comes from. Unfortunately, I will not be able to tell you about the wins that are projected and anticipated in the current business plan. Suffice to say that our existing relationships with the whether it's 4-wheelers or 2-wheelers or tractors or commercial vehicles or even construction equipment is strong. And the existing customers obviously are coming to us with all the new models in play. In fact, there is also a share of business expansion which has started to happen to us over and above the volumes that we were given. So if you look at it, the list will be exhaustive in the fact that we supply to almost 78 different OEMs. So very, very difficult to give you an individual list of where the new order wins are coming from. But if you look at any models, if you look at whether it's a TVS or whether it's a Hero or whether it is a Honda Motors or whether it is Tata's or Mahindras, all of them are working with us, and all new models are now being taken in for development, and some of it will start their volumes and production in the year that we are living in right now.
Right. Okay. And sir, when we are giving a guidance of 23 to 25% revenue growth, what sort of two-wheeler industry growth are we building in these assumptions?
To be honest with you, we have not taken any industry growth for two-wheelers in this particular year. So we are being very, very conservative.
Yeah.
So at
what
flat
we are
industry,
looking at is the share of business going up. What we are looking at is the wallet share increase with new kind of components. What we are looking at is the utilization and optimization of the capacities that we have for the new businesses that have been set up, which is basically migration of business from our competitors to us. That's where this is coming in, and this has been established. So these production lines are now being ramped up. You are aware that all these investments were made on the basis of the customers transferring businesses from other peers to us. So we haven't taken any growth in the industry. If there is growth in the industry, that obviously will be a positive for us in the upward arena of where we are.
Okay. That's really great to know. And so just one last question from my end is, if you see the receivable days or given the absolute numbers in debtors, so there's been a lot of volatility. So in FY21 and 22, we saw the debtor days going up significantly high, and then it has corrected again in FY23. So, can you remind what happened, and is this the normalized level in FY23 where we have ended?
Yes, Raji.
Yes, please. So if you see that in the current financial year, our average receivables collection at Concall has been 43 days compared to 55 days.
Right.
So with the commodity prices being stabilized, the settlements were done from the customer side, because what happens, we get a 1 quarter lag in terms of price settlements. So that has been done. There has been some renegotiation of payment terms with some of the customers, although I cannot name them due to the confidentiality. So that has also helped us to, reduce our receivables collection period. And I think we will be able to maintain the same levels in the current financial year also.
Okay. That is all from my side. Thank you, sir.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. I just wanted to check on this 400 crore capex that we have done in the last 2-3 years, and there's another 100 lined up. So I think the total capex is a fairly large amount. So this capex, at what asset turn have you put this capex at, and which are the core business areas where this large capex has gone into?
This large capex has gone into the sheet metal businesses largely and the castings business. And except the Mysore plant, remaining plants are in production, and the volumes will be seen significantly in the current financial year. 100 crores is a balance amount that we need to spend out in terms of cash outflows to pay off the capex liabilities and to incur some of the capex required to finish up the Mysore plant. That's all. And our asset turn has been quite good. We are about 3 times of the total investment in terms of asset turn. If you take the effective capex versus the turnover giving units, and it is going to improve in the current financial year with the new projects adding up the business.
And when do you think that you will hit peak utilization of this asset?
Well, in terms of our existing assets, we are already at the peak utilization. In terms of the new projects in the current year, we will be hitting the mass productions for the timeline. So, except Mysore plant, all other plants will be hitting the mass production by May of this month, which has already been started on.
That still doesn't mean full capacity for your understanding.
Yeah.
Our businesses are such in where the small incremental capexes have the propensity to increase volumes by a large number. So, for example, if we are doing locks, once the infrastructure is in place, you have a building and you have common facilities, a small line set up could expand the capacity by several times.
And in this product line that we have displayed in our presentation, any product line which is not a, is that a risk to a EV transition?
No, none whatsoever. None whatsoever. They are very, very agnostic to the powertrain technology, sir.
And how much is this ADC overseas is all exports, and that's the only portion of our business which is exports, which is 15% of sales?
Well, that is our international revenue. There is some exports that we do from India, especially in the cabin business and so on and so forth. But yes, in terms of foreign exchange earnings, the bulk of it comes from our overseas operations and overseas 4 plants that we have.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Arjun Khanna from Kotak Mutual Fund. Please go ahead.
Thank you, sir, for taking my question. My first question is, while you have articulated the JV businesses, profitability, etc., could you let us know what is the capital deployed in the business, including loss funding at this point in time?
Yeah. Yes, Rajeev, please.
Yeah, for joint ventures?
Yes, sir.
It is 87 crores we have invested in joint ventures as of now, including all funding, loss funding, etc.
Sure. And when we look at ROC, so when do we envisage at least getting or going above WACC for these joint venture businesses? I know this quarter has been extremely positive, but do we see this trend continuing in the next couple of years? And could we see a double-digit ROC from this business?
Yes, we are hopeful as per the plans that we have got from JV partners, and we have seen the customer demands. We expect that the ROC will significantly improve in the current financial year. And from next year onwards, even we are also expecting a double-digit ROC from a JV investments.
Sure. Thank you. In terms of our debt, this year our debt levels are pretty similar to the previous year. Going forward, while we should have our capex requirements are lower, do we envisage that current year's debt would be the peak debt unless we have some major capex?
Yes, obviously. You can take it. The 547 crores is the peak debt. And we expect, unless there is some project coming up, new business coming up, we expect that it will be reduced significantly in the coming 2 years of time.
Sure. Is there any guidance you are giving out in terms of debt reduction?
Well, normal repayments would be there for the term loans. So as of now, you see 8 crores of cash flows we have generated. Last year, largely 250 crores we have spent on the capex. That requirement will be lesser this year because having said that 100 crores of liabilities we have in terms of past projects and some amount of maintenance capex we would be requiring. So we expect that at least the debt should be coming down in terms of normal repayments. And we don't see this is a peak debt that we consider at 550 crores.
Sure. And lastly, in terms of the EV projects that we are currently on are under development, if we have to productionize a lot of them, what would be the capex that we envisage for the same?
As Mr. Davar addressed, like development activities we have done, only the lines would be required to set up, so that will be doing in a phased manner. In the current year, while the plants will be set up, the basic lines will be set up, we expect something to spend around 9 to 10 crores. And gradually in the next year, depending on the customer's business, the requirements, whether we require to expand those lines or to continue, that depends on the schedules that we'll be getting by this year end.
Sure. There would be no major large greenfield capex? for the same?
As of now, nothing. No major CapEx is on the cards.
Sure. Thank you.
Thank you. The next question is from the line of Udit Gupta, an individual investor. Please go ahead.
Good morning, sir. So my question is that with models like the Honda 110cc motorcycle being launched, so is it a problem for us, or are we supplying to Honda in these models also, because Hero might lose some share to models like these?
Well, to answer that question, I think it's a matter of pride for us that the first Honda lock business that we got was for this 100cc. We are the single source supplier where we set up our lines in our existing Bangalore unit, and we supply from there completely for this new model that has just been launched, the Honda Shine or whatever it's called.
So it's not a threat to us, like?
Well, it's not a threat. I think if both of them combined, we supply to both of them. so
it's fine.
So that's what we are looking at. Huh? Okay.
Yes. And sir, so last quarter you were telling us, sir, that you were looking at 2-3 deals in the four-wheeler business. Has any of that happened, or like we are in process?
Please tell me. Can you repeat that question?
So last quarter, sir, on the call you had said that you're working on 2-3 deals in the four-wheeler space, sir.
Yes.
So is there any progress on that front?
Well, we have got an order from Hyundai already, which is now under development. This is again a large order, supplies of which will begin from the next financial year.
Okay. And sir, the startup costs that we are still incurring, so will the last of them be in the June quarter, or are we expecting some in the September quarter as well?
Well, it will peter down. It will peter down. Yeah, Shvaji, go ahead. Sorry.
Yeah, sure. So, yeah, we expect to settle it down in June quarter.
Thank you so much, sir. Thank you, sir.
Thank you. We have the next question from the line of Saurabh Jain from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity again. So what was the contribution from new projects, 6 new projects during Q4 FY23, and what kind of turnover can we see from these new projects at their peak utilizations?
So, like to touch upon the turnover from these projects, as we mentioned that they were in the development phase in last financial year. So largely they were development costs. The revenue was very insignificant, close or to around 80 crores of the revenue that we generated from these projects. But in the coming, out of these 4 projects of sheet metal, 3 will be in mass production in the current financial year, while Mysore will be coming in mass production by third quarter of the current financial year. That's all.
Okay. And sir, if you could give us broadly what was the capacity utilization in company overall, and as well as JVs, so that of course, Jain sir has given the numbers on JVs front, but if we get the utilization levels, will be quite good to understand what headroom of growth do we have.
Sir, you would like
So if you were to look at all the joint ventures, the 7 of them that you have seen, we have basically just touched the top and the toe line. These are not very heavy investment JVs, as Mr. Yashpal has just said. We have invested, like he said, so far our investments have been to the tune of about 87 odd crores. I would expect that an asset turns of 5 to 6 times is probable in calculating the utilization. 87 crores is our portion, which is 50%. Obviously, if you look at the joint ventures per symbols are much larger because the other 50% has been invested by our partners.
Okay. Thank you so much, sir, and I wish you all the best.
Thank you.
Thank you. The next question is from the line of Sailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. Jain sir, recently visited your Hosur, Attibelli and Bangalore plants. It's very, very good infrastructure with a lot of automations, and the teams are really geared up, sir. Sir, I have 3 questions. So in the lock, there are so many parts going inside the product. So 30 to 40% of the parts still we are outsourcing. So any plans to reduce the outsourcing parts, sir, in future?
No, we don't have any such specific plans to cut down outsourcing because you have to understand that in some of the logs, the number of parts that go in are almost 150. Now, these constitute almost all kinds of technology, which is castings. Again, within castings, you have aluminum, you have zinc, you have magnesium, you have several kinds of specific plastics, you have rubbers, you have steel, you have other kinds of metals that go into it, you have springs, and, so if you were to add all those up, they add up to almost the entire scenario of the manufacturing industry of every kind. While we have taken a lot of this inside in terms of large componentry, in terms of, let's say, castings, for example, we do not anticipate that we will go into fine production of almost all the technologies that there are. And we do find that unless and until there is scale, it doesn't make sense for us to get into every element of manufacturing. So outsourcing of parts will continue. We will do a per chart analysis as to which are those parts which bring value to the organization. And if there is cost merit analysis, we always continue to see that. But at this point of time, I don't see any major initiatives from us in terms of bringing outsourcing of these component parts within us. Yes, in terms of smart locks, for example, as you see, is a large portion of our growth strategy. The manufacturing of the PCBs has already been considered, and we've already set up where we will be doing what there is.
Okay, sir. So my second question, could you please talk about the steel wheel rim business? What is our plan here as industry is slowly shifting to alloy wheels? Is there any plans to scale down the business? And what is the margin?
Not at all. In fact, it's the other way around. The aluminum alloy wheels that came in almost 12 years ago when our volumes kind of dropped. But it sustained itself. It went up to a level of almost 90% of the industry, and it's rolled back to 70-75% of the industry because of the onset of specific models where they felt that there was a legacy, tradition, and design which needed these steel rims. The business actually began to kind of grow. Also, the fact that we are one of the few ones who had the coating facilities. So we haven't seen much competition in this area, and our capacities, in fact, we've grown capacities in the last few years. Incremental capacities have been grown, both in terms of plating and output and so on and so forth. At this point of time, the way we sit, we absolutely see no threat of the business to the steel rim project.
Okay. So my last question, can you please talk about our new machining business? Recently, we have taken a lot of orders from TVS. What was the revenue we have reported in FY23 and how much you are targeting in FY24 and 25?
Well, the business of machining that you're saying has been taken on two counts. One is that we have taken all the machining business of TVS, which means that every kind of castings that go into TVS would now be routed through us. We have taken this business only on a job work basis. The reason for that, again, is we wanted to cut down on the capital employed in the business, whether it was working capital and so on and so forth. The business as it stands, we expect a revenue of close to about 70 this particular year, with a healthy margin of somewhere in the region of 30+%. That's what we are looking at with the machining business. The other element of the machining business is that while we do castings as machining ourselves, such precision casting as are being done, we are moving in almost 400 machines, a part of which, or let's say a major part of which, has already been brought into our facility. The balance will be brought in the next quarter or so. This gives us an opening into a huge exports arena going forward. We haven't started any yet. We are still stabilizing the business for the Indian customers, but going forward, we see that to be a huge revenue and a profit puller.
Sir, in job work business, any further CapEx you are planning, sir, in addition to the 77 crores?
No, there is whatever has already been advised and the plants have been commissioned. I said there is some movement of machines that still have to move from TVS to us, and there is a spillover capex that we have to pay, which has already been adjusted in the numbers that were given to you earlier. Yashpal ji, you want to add something here?
Yes, sir. So total outflow we are expecting all together to finish up the Mysore and to pay the remaining portion of these capex is 100 crores rupees in India. That's the amount we will be spending in current year in terms of cash outflows. To the equivalent capitalization we will be doing in the book for the remaining. That's the final figure.
Yeah. Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Ashish Koti, an individual investor. Please go ahead.
Thank you, sir. I have two questions. One is in EV space, what is our total value per scooters or per four-wheelers, passenger four-wheelers?
Well, it is anticipated right now. I can tell you on the products that are ready with us. One is the DC controller, the EV charger, and the motor controller. All three of them bulked up, depending from model to model, could range from anywhere between 15,000 to 30,000 rupees per vehicle.
Okay, that is for both four-wheeler as well as two-wheeler?
No, I'm only talking of two-wheelers. Four-wheelers, we are in the process of establishing where the cost of, let's say, just the motor controller alone is about 60 to 70,000 rupees.
Okay. So approximately it would always be around 15 to 20% of the value of the product.
It depends. It depends again on the vehicle. If you are looking at four-wheelers, for example, if the cost of the vehicle is 20 lakhs and you calculate 50,000, it works out to a much lesser number. If you look at two-wheelers and you look at all these products put together, then yes, the number you're saying is correct.
Okay. Sir, we have Suzuki as a client in two-wheelers, but they are not our clients in four-wheelers per se?
Right now, no.
Do we intend to add them into our...
Where we do supply to them, but we don't supply directly yet. We supply, let's say, some of the electronic parts that were established in the last few years have already started going. We are looking to talk to them, and we are already talking to them of development of new parts. But at this point of time, we supply relays to them, but that is supplied through another tier one.
Okay. And with regards to overall our product range contributing to our total sales, how much that would be of EV and how much would be normal?
At this point of time, it is very insignificant. At this point of time, like Mr. Yashpal ji just said, our sales to EVs in the last financial year was to the tune of about 25 odd crores. But that came from our legacy products, which is our locks and mirrors. In terms of EV products itself, we are in the process of setting up lines as we speak in the name of the new company that I said, Sandhar Auto Electric Solutions Private Limited, which is a subsidiary. The production of this will begin sometime in the last quarter of this year. But we are not anticipating much revenue coming from this in this year. Yes, once the lines are established and production starts, it will form some portion of our revenues in the next financial year.
It would be 100% subsidiary.
Yeah, yes, it's 100% subsidiary.
Thank you, sir.
Thank you. The next question is from the line of Radha from BNK Securities. Please go ahead.
Hi, sir. Thanks again. So, sir, to previous participants, you mentioned that you are not factoring in any industry growth in the 25% growth that we are expecting. And one of the key reasons for growth is increase in content per vehicle, especially with the two-wheeler players. And you also mentioned 15 to 30,000 rupees for the new EV products in pipeline. Sir, so with respect to this, could you draw a roadmap for us how the content per vehicle was since we listed in FY19 for two-wheelers, and how is it now, and what would you expect it to be in the next 2 to 3 years?
Well, Radha, it is not a simple question. It is a good question, however. Let me try and answer it in some form or the other. You see, what happened was, let's say if you go back 10 years ago, our contribution to, let's say, a Hero motorcycle used to be in the range of 900 rupees, which today is perhaps 2. If you look at TVS, for example, there are certain models in which when we started out, we only supplied them with a lock of 300 rupees. Today, in some of the TVS vehicles, our contribution is as high as 11 to 12,000 rupees per vehicle. And all of this has come with not the same part, but with an addition of parts. And that expansion of the wallet share of that is increasing continuously. Now, as we said today, I mentioned, and I think another gentleman asked that question, our locks itself goes from 300 rupees to 3,000 rupees in case it's a smart lock, for example. That's a 10 times expansion on the value addition that you're putting into the picture. The same is happening with mirrors, for example. We now have new kinds of electrochrome mirrors, which are completely different and where the price is again more than 10 times. So it is happening with every product in one category or the other. The other thing is in terms of, for example, the TVS lines or the sheet metal new plants that we put. These are products which we were not supplying earlier. They were either being supplied or neither not there, or if they were being supplied, they were supplied by a competitor. Obviously, because we were found to be more viable, more competitive, better in terms of technology, we've got those businesses. And this process and this strategy of the company will continue. And that is not going to stop. And that is the reason why we continue to grow, despite the fact that in two-wheelers, we are not really taking any market growth for that particular sector. So even in the last year, if you look at it, the entire market grew at 12%, but we as a company grew at 25%. I don't know if that answers your question, Radha. That's my best way to explain it to you.
Yes, sir. Thanks so much. So just lastly, could you give us the two-wheeler keyless locking system penetration in the industry as of now? And what do you expect it to be in the next 3 to 4 years? And secondly, sir, since the cost of two-wheelers have gone up significantly, like you mentioned in the last few phone calls, with this keyless locking system penetration expected to increase further, do you see this jump in keyless locking system to increase significantly despite the rise in prices of two-wheelers? And
Radha, again, a very good question. I mean, the answer to that is very simple. You saw that in 2019, we as a country sold about 22 million two-wheelers, which fell down to 13 to 14 million. Dramatic drop down, and a large part of that drop was not only on account of COVID, but also on account of the price increase. If you look at price increases in the two-wheeler segment, they've gone up from 40% to in some cases 90% over what the numbers were in 2017-18. Obviously, the market went in for a shock, and there was not so much of an ability to pay for these new wrought-up prices. Having said that, over a period of time, because of the cyclic nature, because of the replacement cycle that also comes in, people knew that they would have to buy. Add to it the fact that there has been a huge increase in the interest costs. And you are aware that a lot of vehicles are bought on EMI. When that EMI goes up because of the increase in interest rates, the overall impact of cost of ownership went up dramatically. So what happens is over a period of time, people get used to that idea. But we are still not at 2019 levels, even today. What we are anticipating is that we will see very minor increase in the volume. Yes, there is a fact that a company like Hero, for example, is probably launching 20 models in this year. Some people are saying even 30. Every company is coming up with new models to attract the different segments of the market. We will have to wait and see how that pours up. But for us, our strategy continues. We will add to value addition. We will add to the market share. We will add to the wallet share. All of these are being put together in terms of newer technologies that are either being mandated from comfort perspective, safety perspective, or from a ease perspective. All these three put together is bringing in new technologies, and new technologies will continue to add cost. But for us as a company, it will make sense even if the market doesn't grow as a sector.
Understood, sir. Thank you, and all the best to the entire team.
Thank you very much, Radha.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you very much, Michelle, for putting this together. Thank you very much, Abhishek, for getting everybody together. We tried, me and Yashpalji tried to answer your questions to the best of our ability. However, feel free to reach out to us and we will try and clarify whatever questions we can take under the allowed guidelines. We are very bullish for the company. We are sitting solidly on the order books, and unless there is some world event that happens or there is something unusual that happens, I see no reason why the growth that you have seen in the last year will not continue. We also are confident of the expansion in terms of our margins. We will continue to work on the reduction of debt. We will continue to work in improving the operational efficiency and reduction in costs. We are very much conscious on the control of new capex, and as many people mentioned, to make sure that we do the maximum utilization of capex that's already being incurred. We are looking at integration of some of the manufacturing plants. We continue on the diversification of our product portfolio, the expanding the customer base, and like many of you said, increase content per vehicle. That is our mantra. That's what we are trying to follow. And we are very, very hopeful that this will lead to very, very pleasing results for all of us. Thank you once again for joining this morning. Thank you once again, Dolat Capital. Thank you, Michelle, for being the moderator today. Thank you very much.
Thank you very much, sir. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you. Have a great day.
Thank you.